Hey guys, what's up? This is Francisco with Valorizo Capital, and today I'm gonna bring you the trade review of the week. We're gonna take a look at Blink, BLNK. I'm gonna go through the overall risk management of the trade. I'm gonna talk a little bit about the risk reward. I'm gonna talk about my stop level. I'm gonna talk about my target level, and then of course we're gonna take a look at what was actually the setup and what caught my attention to look at Blink as a possible swing trade to the long side. So first of all, as you can see right here, I have the chart for Blink, BLNK, and what actually caught my attention to this trade. So there's actually three things that caught my attention for taking a long position on Blink. So what was the first one? First of all, we actually made a higher low. We printed a higher low after earnings. So that was the first thing that actually caught my attention. I was watching Blink previously, of course, is one of the names that I have on my watch list. And one of the reasons that I have Blink on my watch list is because Blink was already trading near that 50 daily moving average, which is the purple line here. And as you can see, this purple line here is actually starting to flatten here a little bit. So that actually signals that there is going to be a probably be a change in the trend. As you know, the 50 daily moving average is a really important level for support or resistant at an institutional level. So that's actually something really important for us to understand, and it's actually a really easy concept to know. So that was one of the reasons that I have Blink on my watch list. And then what caught my attention, as I was mentioning, is that we actually printed a higher low. So that was the first thing that caught my attention. Because what is a higher low? A higher low, or probably a lower high, is kind of the same concept. It actually means that there is a probability that there's going to be a change in trend, right? So that's the first thing that caught my attention. What is the second thing that caught my attention? Is this bar right here. This bar move above three levels of important resistance. The first level is the 50 daily moving average, which is the purple line. The second level is the 8 exponential moving average, which is the orange line, and the third level is the 21 exponential moving average, which is the blue line that I have right here. And how did it did? It moved above all of those three resistance levels in a pickup in volume. So we can see here that we actually have a pickup in volume, an uptick in volume, and we move above all those three levels of resistance. So what is that telling me? That is telling me that there's actually a conviction by buyers in this name. So that's the second thing that caught my attention. So what's the third thing that caught my attention in Blink? That we actually retested the 21 exponential moving average, and we actually had a bullish cross between the 8 exponential moving average and the 21 exponential moving average. So that's the third thing that caught my attention. And of course, while I was looking at this name, you have to be a little bit opportunistic with these names because they move really fast. So where did I set my alert right at that 21 exponential moving average. So as soon as I saw, right, I got my alert triggered. And when I look at the name, I just bought it instantly at that exponential moving average. And I was using that low of the day as my stop in this position, right? So you can see right here where I have the arrow, that's where I bought it. That's actually the day that I bought Blink. And as soon as Blink, you can see here that we took the high of the previous day and we actually closed above that level. So that's actually a pretty bullish signal. So as soon as Blink did that, I moved my stop because so how did I manage this trade? As soon as I bought this name, I was using the 50 daily moving average as my selling guide. But as soon as we start moving above the previous day high, I move quickly my stop into the low of the day, right? And as we can see here, let's just use the mouse here. You can see that the low of the day was 23.26. So I moved my stop to 23.20. So that was the stop that I was using. It was 23.20. And how did I look for my target, right? For any of you guys that use Fibonacci, you can see that here that I have the 1.272 extension. And basically what I did, I just measured the previous swing, right? The previous biggest swing, right? So I measured this swing high and this swing low. And I was just looking for a move all the way to the 1.272 extension. And as you can see, I took my profit somewhere around this level right here. So of course I did not sell the high of this bar. And of course I didn't buy the low of this bar. I just basically bought it at that 21 exponential moving average, and I sold it somewhere around this level right here. I usually like to go a little bit before the 1.272, and I'm not much of a breakout trader, so I don't buy breakouts. I'm more of an exhaustion trader, so I am looking to buy pullbacks into moving averages that might signal a change in trend. That's kind of that is actually my style. So now that you understand what was the triggers, what was the psychology behind the trade, how I was looking for my target, what was my stop, let's take a look at the numbers. And I use TraderSync for that, which is an amazing trading journal. Let's take a look at the numbers. And you can see here that I bought my position on March 17, which was the candle that tested the 21 exponential moving average that we took a look at just a moment ago. And then I sold my position on March 22nd, which is the candle that I had the green circle that was near that 1.72 extension. So my at the price that I bought this position was 23.60, and the target that I was using was 26.30. I was actually looking for a higher target. My target at the beginning was 27.40. One of the reasons that I sold my position before that was that the market was already extended, right? The market at that time for March 22nd, which was last Tuesday, the market was already a little bit extended. The market was already moving higher for somewhere around 3 to 4 days. So I was already looking at take my profits, because the market, we know that we have been in a really volatile market, and we have been kind of in that kind of market when you have profits, you just have to take them, right? So that was one of the reasons why I took my position, what I took my profits before my target price. And then of course my stop, I was respecting my stop. My stop, you can see here, that was 23.20, and I was actually only risking. So here's the magic of trading, right? The magic of trading is that, of course, we don't know. We have zero idea what is going to happen next, right? So if we have zero idea what is going to happen next, how the heck we make money, right? Risk management. That's how we make money. That's how we traders make money, because at the end, we don't know, right? It's a flip of a coin. We don't know if one setup is going to work, and we don't know if one setup is not going to work. We have no idea. We work with uncertainty every day in the market. So it actually comes down to risk management. So you can see here that I bought my position at 26.30. I bought my position at 23.60, and I set my stop right here at 23.20. So I was just risking $36, and I was looking to do $342. But of course, I saw my position before that, saw my position at 26.30, and I end up making $243 for this trade. And what was my R multiple? It was 6.75. So that means that I was risking just $1 in order to make $6.75. And that's the magic of trading. You have to risk, you have to have tight, you need to have, well, you don't need to, it depends on your style. But my style, for example, since I'm an exhaustion trader, I'm looking to manage risk. So I'm looking to have really tight stops in order for them, if they don't work, I'm out instantly. And if they work, I'm looking to make what? 3R multiple, 4R multiple. In this case, I made almost a 7R multiple, which is a really nice trade. It's a really, really good trade, because that means that this trade is going to cover what? It's going to cover 6 losers, right? So I can have 6 losers in a row, and this winner already took care of all those losers. So that's something really important to understand about trading. And that's one of the reasons that I wanted to share this trade with you guys. So as you can see, this was somewhere around an 11.44% return. And it was a really, really a good winner for me. It was a nice trade. Of course, a kind of a smaller size because of the volatility of the market and everything. But overall, was a good trade, was a good winner. And most importantly, it was a well managed trade, right? The levels were right there for my stop and for my target, because when it comes down to trading, it's all about risk management. So thank you so much, guys, for watching. I hope that you find this video helpful to understand the concept most importantly than the uh, more importantly than the setup is actually understanding the concept of risk management, because it all comes down to risk management. So thank you so much, guys, for watching. Remember that this video is just based on my personal opinion and is not financial advice. But thank you so much, guys, for watching. I hope that you have an amazing rest of your weekend, and I will see you on future videos. So take care and have a good one, guys. Thank you.